And welcome to BQ Prime. I'm Hiral Datia. We are in the midst of the earnings season. A lot of stock-specific action is what we are seeing. Joining us on the show to discuss the newsmakers of the day, we have Rahul Shah, Senior VP, Advisory Leader, PCG, Broking and Distribution at Motilal Oswal joining in. Rahul, welcome to the show and a pleasure to speak to you.
Hi, good morning, and same here. Pleasure to talking to you.
Right. Rahul, let's pick up the first stock, that is L&T Technology. Stock overall, if you go to see, has been trading slightly under pressure in today's session. In fact, in the last 1 year, the stock is down almost 38%. And now they have gone ahead and agreed to acquire, they'll be acquiring one of the businesses from L&T, which is the parent company. And this is Smart World and Communication business. Your call on the counter, and what do you make of this acquisition?
I think if you look at the entire sector, first of all, let us discuss on the IT as a whole as a sector. If we see last 6 months, they have been hammered continuously, and I think most of the large to mid IT names have fallen 25 to 30% from their highs. Secondly, I think if you look at the mid caps, have been hammered more, maybe 35 to 40%. So I think if you ask me, then I think the valuation wise, they have already, that peak valuations have gone, and I think that they're trading at fairly good, fairly valuations at this juncture. Usually Q3 numbers for the most of the IT companies are a little bit muted, and the most important for them is the commentary. I think if you look at Infosys results, if you look at HCL Tech results, if you look at TCS results, all of them, I think one thing was very clear: everyone is guided for the increment in the margin will go up from here, which was the last 2-3 quarters which were under pressure, and things looks better than what it was. So my sense is, I think in near term, the challenge will remain, I think, for two things. One, obviously, how the growth will start coming up. Market gives speed or the valuations on the growth, not on the static or 2%, 3% kind of growth. The IT companies in last 5 years, if you look at, they have been consistently outperformer in terms of the portfolio. If you have kept Infosys, TCS, or any of the large or mega IT companies, they have fared very well. So there's this juncture, if you ask me, I think, if you have two things, one is risk versus reward, then I think the risk is lesser and the reward could be good for investors who have an appetite to hold for a year and a half or more. So just to give you a perspective that, that IT companies in last 5 years, in terms of, the profits and in terms of the buybacks, what they have done, I think that's humongous. So I feel that from here, that overall IT as a sector should outperform for a year and a half. Maybe for a quarter, you might see investors might wait for Q4 earnings and then take a call. Now coming to L&T Tech. So again, L&T Tech as well, I think post this L&T deal, which is obviously 800 crore deal from L&T to L&T Tech. So I think obviously everything is welcome for such kind of an order book for any company or IT company as a whole. And secondly, but I think this stock has remained under pressure today only on back of most of the IT names post numbers like HCL Tech and Infi. In spite of the numbers, they've remained in the soft. So I think that's the main one thing. And interestingly, if you look at where the FIs have been sellers in the IT companies, is I think I was looking at one of the data. I think they've sold more than 75,000 crore in last 1 year in most of the IT names. So I think this is a scenario where, like last year in at 2021 to mid 22, we have seen that banking stocks were hammered by FIs the same way, and we saw the outperformance once the numbers are delivered by the banking stocks and they're back into action. So maybe I feel that maybe a quarter or so, maybe post that Q4 earnings, I think things should start and people should send market discounts, the future earnings. So I feel that the downside looks limited in most of the IT companies from here.
Right. And that's a good point to make, that the downside looks limited from here on. And, talking about, as you already mentioned, about the sector as a whole, HCL Tech clearly, the in terms of earnings, it has beat street estimates, but the stock is trading under pressure right now. Infosys has gone ahead and raised their full year growth guidance. And if you talk about Cyient, the third quarter delivery has been good. Their outlook seems to be improving as well. And $1 billion revenue is what they are targeting in terms of 2024. And you have Wipro and Persistent as well that are in focus in today's session. So clearly with all these counters, let's divide it between the mid-cap IT majors as well as the large-cap ones. Taking valuations into consideration, taking the way the stocks have moved in the last 1 year, the global macroeconomic outlook, and overall from a deal perspective and a sentiment perspective, where would your bets be if someone has to look at entering the IT space now?
So my top bets obviously will remain where I think where there has been a less volatility of earnings. So I think in that is remains the large caps. Today, large caps have also corrected decent enough vis-a-vis the mid caps. Obviously, have given up more from here. So I think in a large cap space, I think Infi remains the top bet. So I feel if one is the preservation of capital, and when the sector starts performing, it's first that your large caps tends to move first, mover advantage. So I think there are a lot of headwinds in terms of where the markets are, I think, overall perspective. So if I have to bet, so I will bet on Infosys at this juncture, followed by HCL Tech. And then thirdly, obviously, companies like Cyient and companies like Tech Mahindra, which augurs value at this juncture. And the valuations are very cheap at this price. So I feel these are the three, four bets which I feel that one should look at in IT companies.
Right. So that's the overall view on IT. Moving from there on, one stock that is in focus is a Gujarat Gas. Now, that stock has been trading under pressure. And clearly, if you go to see, it's about everything to do with propane, right? That's been dominant in Morbi. A lot of people are talking about that alternate fuels could probably only be a 3 to 4 month seasonal risk to the company. And what would you make of a Gujarat Gas? Because clearly the recovery in China's energy demand also could probably go ahead and re-rate the petchem margins and aid refining margins.
I think the Gujarat gas, if you look at the entire sector, if you remain has been under pressure
Mm.
for last some couple of months. If you look at vis-a-vis, if you compare with IGL or with Mahanagar Gas or something like that. So I think all of them have remained under pressure. The valuations adds to comfort to it. So my sense is, I think if you ask me, with a systematic business model with a consistent growth of 10-12% kind of a stuff in this kind of companies. So my view is, I think one should definitely add some kind of into their portfolio. And what is market looking at today? Is it they are giving values? People are investing where we are seeing that valuations are comfortable. So I think Gujarat Gas looks good, interesting story for me. So I think one should look at for 20% upside from here.
Right. Do you think that, the price cuts that we are seeing in Morbi, that could act probably as a headwind for a Gujarat Gas right now?
I think so. That should add headwinds for this thing. But I feel that way things have been. I think the price cuts would be for a temporary nature. So does not look like that. That's going to be bigger picture is better than what.
Right. Apart from that, moving on to another stock that is in focus today is a Shriram Finance. Overall, what's your view on a Shriram Finance, and what would you advise an investor to do with this counter?
If you look at it, I think the entire NBFC as a whole, when your entire banking and financials have done well, I think NBFC as a whole has sector been underperformer. If you look at it, so first we see a momentum building it up in banks and then followed by financial NBFC. But this time, I think we've not seen that kind of an action in the NBFC stocks. So if you name it from the large NBFCs to the mid, everyone has underperformed in a very muted kind of a returns for the markets. Obviously, because one thing is that the visibility of earnings were very fairly seen in the banking side and then the NBFC side. So I feel that I think still all these NBFCs will start moving, building it up into the play. Obviously, once we have seen the banking stocks, so we'll see the results even starting tomorrow with HDFC Bank, how it kickstarts it. And then again, we'll see some re-rating happening in the sector in the commentary to look at it. When we talk about the quarterly updates, which the most of the banks and financials gave, I think the numbers, what the updates were given were very robust. So let's see for it. But secondly, one thing more important to look at, it's not an apple to apple comparison with Bajaj Finance and Shriram, but I think Bajaj Finance were, I think the comment, what updates, what they give us a little bit muted and below the street estimates. So I think that's going to be important for most of the NBFC companies, how their earnings season will be. So I think post earnings only will be able to comment on all these NBFC stocks. Till that, I think it offers value, but I think there are banks which are offering a better value proposition from here. So I would bet if I have to overweight on it, then I would be on the banks and rather than the NBFC at this point of time.
Right. In fact, Rahul, we have a couple of more minutes as well. One last question I would want to take with you is in terms of where metal stocks are concerned. In today's session as well, you have majority of the metal counters which are advancing in trade, taking the global perspective from China reopening up, plus in the way the prices have been moving for metal commodities. What would your view be on the metal sector? Do you think it's an avoid at the current juncture as well? Or do you think it's the time to start bottom fishing in terms of metal stocks from a valuation perspective, and which stocks would they be?
I think if you look at it, I think when you see the cycle last year, when most of the commodity cycles were on, and I think we saw a good run up in most of the steel and the overall entire metal as a sector, we did very well. Then we saw a couple of pause and a couple of policy decisions which came up, especially for the steel export duty was levied and then it was removed a couple of last month or so. So I think then we saw some momentum building it up in the steel stocks again. When we're seeing the China reopening, I think that's a big thing which we have to look at it. And I think post that, we've seen, I think most of the steel stocks have rallied 10 to 15% from that perspective. So I feel that things are better for the metal stocks. I think looks like that. I think here onwards, I think one should look at it. Just to give a perspective, I think Tata Steel, which has done nothing in last 6 to 8 months vis-a-vis other metal companies have done much better. And the valuation wise, if I look at it, and the quarterly updates also which came from the Tata Steel were encouraging. So my view is I think one should definitely build it up and as a metal as a sector to build it up in their portfolio and give some allocation to it. Starting from Tata Steel with valuations are very cheap, good dividend payouts, and I think that good policies by the companies overall. And I think the overhang was about the European businesses. So I think that's also will get more clarity
Mm.
on the quarterly numbers. But overall, if I look at it, then I think Tata still remains the top bets from here, followed by Jindal Steel and Power, which we have seen that the stock is that at 52-week high and it's continues to go to perform. So I feel that steel remains the top bets, followed by I think aluminum. I think Hindalco also remains the top bets from here. I think the way that things have been. So I think, and if you look at the commodity prices have also have been soaring in last 6 months. If you they are at almost the 6 months high. From maybe the prices of in April, May, are still to be seeing at this those prices coming back to copper at around again around 9,000 levels. So my views, I think definitely one should build it up, buying up metal stocks in their portfolio.
Absolutely. So that's the view coming in on the movers and shakers and the newsmakers of today. Thank you, Rahul, so much for joining us on
My
the show.
pleasure.
A pleasure to speak to you and get your views for the benefits of our investors. Thank you and stay safe.
My pleasure.